Gregory, it's a great pleasure to be speaking with you today in Nairobi. You're a fixed income strategist at Renaissance Capital. You're visiting Nairobi. We've had a little conversation today. Thanks for spending the time to speak with us. Thank you.
A real pleasure. Good to see you.
Good to see you too. Gregory, you're visiting Kenya, you've been in Zambia, you've been living in many parts of Africa. Describe a little bit to us what you're seeing in these markets, in the fixed income markets. Tell us what's happening.
Yes, I've been travelling around the region for a long time, and what we've seen is a big change in many of the countries over the last 6 to 8 years as they've got market access. So Kenya is a great example of Chinese lending. It's an example of Eurobond access and also syndicated loans. In other countries you find the Eurobonds and the Chinese lending, but Kenya is a good example of all three. And this has created really good opportunities to invest and to move the countries forward. But it also comes with challenges in terms of servicing the debt that's linked to those projects and that borrowing, and making sure that there's value for money from all that investment. So I cover about 20 countries in the African markets, each with Eurobonds, some of which have local currency bonds that are of interest to non-residents, but most of which it's the hard currency bonds.
And if you look across this 20-country continuum of yours, what are you seeing play out? Because I remember a point last year when everybody looked as if they were the same credit, they were trading within 50 basis points of each other, whether it was whatever it was. But it seems this year we've seen some pretty interesting moves. I think you were in Lusaka earlier, and Zambia, of course, is at 17% now. So just describe what you're seeing in terms of granularity across this space.
It's been very different in 2018. The year started off okay with inflows to emerging market bond funds, but as the dollar strengthened from April, it's become a really, really tough year for emerging markets in general and the African Eurobond market. So 2017 flattered a lot of the credits because it was a relaxed environment for investors. They were getting money into their funds and they just went with it. So we didn't have much differentiation. This year that's changed, and we've seen a big difference. But one key thing is this year is we've seen record issuance of African Eurobonds.
In the first half of the year?
Yes, the majority was there. Even I think by May we had a record. And since then Angola's come with an extra $5 million tab. But this is a record year for African Eurobonds. And there were two other trends that were interesting.
Yeah.
One was longer dated paper.
Yeah, 30-year bonds. Yeah.
Precisely. And this is very important because when we talk about Eurobonds being for infrastructure investment, sometimes it's hard to grow enough in 10 years to get the economy bigger to repay the loan. But that 30-year loan gives you a chance. And we've also seen issuance in euros as well as dollars, which has changed the market.
This is Francophone Africa more, I think, wasn't
That's
it?
right.
Yes.
It's a key characteristic of Cote d'Ivoire and Senegal, but we've also got a South Africa Euro loan and Tunisia, etc. So it's not just restricted there, but both countries, and particularly worth noting was that Ivory Coast managed to issue a 30-year euro-denominated bond, which was a real surprise, but good for the asset class. These did well because at the start of the year, but then, as I said, since April, this stronger dollar has really put pressure on the asset class. And a key idiosyncratic story has been Zambia, which since February has performed sadly not as well as the market and the average of the other African Eurobonds, on fears of increasing debt levels and a complacency in government to tackle these issues.
Yes. A lot of people seem to be concerned with particularly Chinese borrowing in Zambia, and I noticed President Lungu was speaking about very warmly about China. Is this concern, you said the two things, big trends you noticed, one was Eurobond issuance and one was China making a lot of money available to the continent. Do you feel that Chinese money has been effectively deployed, or do you think a lot of it needs to be restructured? In the last few weeks, I've seen that the railway, Djibouti to Addis, has been restructured. I've seen a restructuring of a loan to Botswana. I mean, is this a trend we should expect? And does it change the way you're looking at things?
It does. China's hard to read, but we have to look at China very carefully to understand the debt dynamics in many countries. So with Zambia, they've borrowed $3 billion from the Eurobond market, and they have sizable Chinese lending for infrastructure projects. The difference between the Chinese borrowing, it's strictly linked to a project where the Eurobond money goes into the central bank and then to the government to spend. So the key thing is that it's too much too soon, and hence debt service costs have increased. So once government's paid its salary bill and it's paid back its debt that's amortizing and interest payments due, there's very little left for development expenditure. And this has put an immediate pressure on the government. I think with Chinese lending, it's difficult to generalize because there is some grants and some more expensive loans at the other end of the spectrum. And there are some projects that deliver value for money and others where there's a lot of concern that value for money hasn't been reached. So it's very difficult to generalize even on a country level. But what's very clear is the debt pressures have mounted. And this is a key point in time to sort of step up and deal with this problem. And most of all, it's to try and calm down some of the new borrowing and also have a look at the terms of the existing borrowing. So I know that there's been a lot of conversation about this the last few months, and the markets are eagerly waiting to see if Zambia's managed to extend some of the maturities like the Botswanans and the Ethiopians have done.
It's probably quite important for them to do that. That would be an important signal, I would have thought, to the Eurobond market.
Yeah, both an important signal, and it will ease the pressure slightly on the authorities and their ability to implement 2018 and 29 budgets.
Before I come to East Africa, I just want to go to West Africa. You touched on Senegal, you touched on Côte d'Ivoire. You know, these are smaller issuers, aren't they? They haven't issued that much into this Eurobond market of $81 billion that was issued, I think, over the last 6 years. But describe how people view that, you know, that ECOWAS type economy, and what you're seeing from that side and the appetite.
Yeah, the giants of the Eurobond market in Africa are still Nigeria, South Africa and Egypt. So behind that, there's a number of countries. And so they're not the smallest issuers, but they're far from the largest. And they're similar economies in that they're oil importers for the time being, although we have conversations about when they might start exporting gas and oil. But they're also high growth countries. So in this year's sort of top 15 fastest growing countries globally, both countries are up there. And that's a very important story for investors to see this rapid growth.
See fast GDP.
Absolutely, it's great for debt dynamics. Not a silver bullet, but it certainly helps. You still have to watch out for other vulnerabilities, but growth really helps because your debt levels, your economy's getting bigger, your ability to repay is getting stronger. So these are dynamic economies, both of which have got elections coming up, so there's some concerns there, but these are small. And I'd say of the 20 African countries in the Eurobond market, those both Côte d'Ivoire and Senegal are in that top 3. When I talk to investors, they're often in people's lists of their more preferred credits at the moment.
Coming to East Africa, of course, you're here, you're visiting in Kenya. There's been a tremendous debate about the fiscal issues, media concern about is the debt sustainable. We've had these tax increases where there's been a lot of pushback from the common person. How are you reading Kenya's situation?
The way we do our research is to get out of the office. We travel, we come and meet people, we talk to government, we talk to businesses, we talk to different people across the economy and society, and that really helps. And that's what's been fantastic about this week, getting to know people. And it's been a busy week with the parliamentary budget debates going here in Kenya. So I've been coming to Kenya, I think, for 15 years on regular trips. And what I like about some of the recent investment, it's aiming to sort of try and improve costs, right? Trying to lower logistical costs and make Kenya more competitive, which I think is really important.
Which makes sense from the geopolitical angle because, you know, it's the route to the sea and the global markets for a number of countries, not just ourselves.
That's right. I remember the conversation 10, 12 years ago was always it cost the same to get a container from China to Mombasa than Mombasa to Nairobi. So anything to sort of tackle that and reduce cost is really important. But on the other side of the coin, we've got to remember that these loans are often expensive in terms of the interest burden and the amortization that's coming. And you have to sort of be really careful to prioritize only the most important projects. So it's sort of trying to weigh up both sides of the story, that we're investing for competitiveness, but we also need to be consider the debt levels with absolute care. For Kenya at the moment, for me, it's not a story of debt problems in terms of levels, but trajectory. I worry about if we keep up these fiscal deficits, where do we end up? And that is a very good conversation that I've been having in the last few days from different people, giving their insight into whether these fiscal deficits can be reduced from current levels to sort of push the country and nudge it back to more sustainable and prudent levels of debt.
Looking across your African universe, what's your strongest buy right now?
The markets are in a tough state this year.
Yeah.
Just that has to be said. It's been really tough for all EM. But for an African credit that's performed above others this year, it's Ghana. And I think Ghana's a good turnaround story. And that makes me happy that markets are looking for a differentiation. And we've had a number of downgrades this year from the credit agencies. The only upgrade we've had since Senegal last year has been Ghana. So they've been recognised.
Just 2 upgrades in the last few months, then, last more than a year.
Yes, that's correct.
Yes.
So first one of 2018, certainly. Egypt had its a positive outlook, but the first upgrade by Ghana. And that's really important because it reflects their lowest fiscal deficit in almost a decade and efforts to reduce the twin deficits. So I spent a lot of time in Accra in 2014 and 15, and that was really tough on the economy. So what made me really happy this year was to go to the Eurobond roadshow in London and see the officials sort of looking proud and telling their story. And this has taken a lot of hard work. This story won't be forever. There are pressures to come, especially as you run up to the next election. But I think that needs to be credited as a good story of 2018.
Gregory, thanks for taking some time out to speak with us today.
Pleasure. Thank you very much.
Thank you.